Hey, how's it going, everyone? Welcome back to the channel. My name is Jesse, and today we are going to be talking about Tenet Fintech. All right, so before we get into this, please check out the description. I've got timestamps throughout the video of the different content, so if you want to skip ahead to certain content, feel free to do so. I know these can get a little bit long, so hopefully this helps out, and with that being said, let's dive on in. All right, before we get into this, I just want to say that microcaps and small caps can be extremely risky, whether they trade on the NASDAQ, TSX, or TSE, OTC. There's a lot of volatility within them. Companies that are pre-revenue or pre-profit have a lot of inherent risks in them. And a lot of times their price is really dictated on their future expectations and kind of the sentiment around them. So I just want to give a warning, and I don't want to belittle the amount of risk that is in these type of securities. So first, let's get into a brief overview of kind of what Tenet Fintech does. And their main goal is basically to be a platform where small and medium-sized businesses can network together and can facilitate transactions, do business together, and they would integrate essentially different services into the business hub in order to be able to kind of facilitate those type of transactions, whether it be from their steel verticals, oil and gas, raw materials, insurance, consumer goods, clean energy, banking, automotive. They've been basically in China for the last couple of years as a proof of concept, and they've been steadily growing that business. Really, the heart of the business hub is really Cubular, and Cubular they recently acquired back in 2021, and when they were doing the proof of concept, they were essentially licensing out Cubular's platform in order to do the proof of concept in China. So the critical part about the Cubular acquisition was that it really allowed them to start going on into their second phase, which would be expanding additional business hubs into other geographical locations, and eventually interlinking those business hubs to where they could facilitate not only transactions within countries, but internationally as well. So phase two, they're really looking at going into North America, the Canadian business hub, and kind of replicating what they've done in China, in Canada, and linking these business hubs to do international transactions and services. So that's a little brief overview of the company. Now let's go over to the chart. All right, so here we got the 5-year chart daily candlesticks, and we can see that Tenet, or used to be called Peak Fintech, ticker PKKFF, has had quite the volatility over the last several years, going back to 2018. We kind of saw this breakout in 2020, going into 2021, consolidated around $4 to $5, dipped back down, and then we marched up to close to $12 before selling off some more, bad macro environment, selling off some more, and getting down to under $1. Which is crazy to go from 12 to 1. But like I said, these can be extremely volatile, and especially small caps that can move pretty big percentage points based off of relatively small amounts of capital pushing them. So a lot of things happened during this period. They went through a public offering through here where everything was froze, kind of dipped down, and then once the public offering closed, they raised about 52 million Canadian, I believe. I believe that was the number. We kind of saw this pop, and then we began this just ginormous run from around $3 to $12. After that run, we got into NASDAQ. They uplisted in NASDAQ, and then they halted on NASDAQ and technically they withdrew their application from NASDAQ due to some SEC things. So with the filing of their Form 40F. So they did that, halted on the US side for about a month, if I remember correctly, dipped back down, came back up. Shortly after it came onto OTC and was tradable again, a short report was just just happened to be released. It sent us down to about $5, $6, 5.65. Bounced back up, and then we kind of just saw this continued sell off with the overall market, as everything went risk off. Everything tech kind of struggled, and we dipped very, very, very low. Once everything was said and done, we were sitting right around 92 cents at the low, I think, which is pretty crazy. Go from $12 to 92 cents. That's amazing drawdown, ridiculous drawdown. So that's kind of just a brief history of the chart. Let's get into the company a little bit. So here we have the investor presentation for Q1 2022, and we're going to go over this really briefly. We can see, right up front, they say to build an AI-powered network that links small business owners and executives from around the world. And we talked about this briefly in the beginning of the video, going over just the overview of Tenet Fintech and kind of their business model and what they do. Now, up until this time, the proof of concept for Tenet Fintech and the Business Hub has really been the Chinese business. And we can see a couple highlights here. Estimated number of micro enterprises actively operating in China as 2021 was 70 million. Estimated number of active SMEs in China as of 2021 was 40 million. Number of factories in China, according to the China Statistics Yearbook, was 2.8 million. Percentage of the world's goods manufactured in China, according to UN statistics, was 28.7. So they're just pointing out some key details about the Chinese economy, kind of the scope of where they're doing this proof of concept at. And this really moved from like a proof of concept into a viable business on the Chinese side pretty quickly over the last couple of years. They started kind of in 2018, I believe, started building it out and then adding more utilities and features in the Business Hub, gained more partnerships, and began to ramp up their revenue coming from the Chinese business side pretty quickly, as we will see in the financials coming up. Here is a pretty nice little overview of just kind of the architectural layout of the Business Hub in China, kind of going through the SMEs that are using it, the factories, government entities, insurance brokers, automakers, manufacturers, shipping warehouse material, banks, kind of the scope of businesses that integrate into the Business Hub, the B2B commercial transactions, kind of the overarching things that they facilitate, insurance, logistics, credit, and then the different type of platforms or specific, like kind of, I would say, like modules built into the Business Hub to help facilitate these transactions across these SMBs. Which we have Gold River, Link Steel, i360, Clean Energy, Heartbeat, insurance brokerage, Fleet, which is a shipping and warehouse SaaS platform, and then Lending Pro credit management module. And then all of this is kind of built on top of the Cubular AI and analytics engine. You can see that is comprised really of APIs, authentication, fund transfer, payment processing, AI and analytics, and IoT. So this is a pretty nice little overview of kind of the tech that they are using and the architectural design from all the way to the low level details of the what the architecture is actually doing, the businesses that kind of can use it for different services, from transactions, insurance, logistics, and credit. And then they're constantly building more features and services over the last 2 years into this Business Hub environment. And as we went over before, kind of going over the Chinese Business Hub, we can see the verticals kind of integrated into the Business Hub as from steel, oil and gas, raw materials, insurance, consumer goods, clean energy, banking, automotive. The type of membership services these verticals get would be product acquisition, credit and financing, shipping and logistics, payment and fund transfer, analytics, and insurance. And then as of June 22, over 3.2 billion worth of credit has been facilitated by the Business Hub, over 500,000 plus insurance policies placed, and over 80,000 SMEs served. So kind of nice little background of the current scope of how the Business Hub is functioning in China. Here we can see the big picture and the overall vision of the company to not only have individual business hubs in several countries, but to consistently be expanding and then interlinking these business hubs to facilitate kind of international transactions. So currently they're working on launching Canada to be the first of the expansion, and then from there they have kind of showed roadmaps before of the next areas that they would be targeting. Here we can see the overall goal once these business hubs are kind of developed of the services that they want to offer, including lending, facilitation, advertising, promotion, products and services, networking with other businesses, owners and business executives, exclusive market research, market intelligence, premium news, and industry specifics. So as they onboard more and more SMEs, they will be able to gather more and more data across these different SMEs, and then be able to provide these type of services, not only from the business type services, but also from data AI analytics for the type of transactions and the type of business flow that they are seeing on a global scale. Here we get an overview of how they believe they're going to get the data from these SMEs, including business operations and financial data directly from SMEs accounting software, data from polls and surveys conducted with Business Hub members, collateral and alternative data from postings and interactions between Business Hub members. So basically through API links connecting the SMEs accounting software Business Hub, and by providing the SME owners and executives with an interactive networking and communication platform, Tenet will gather, accumulate, and analyze data in near real time on SME activity, which will give Tenet a finger on the pulse of the economic activity around the world, which is pretty interesting. I mean, if you have enough adoption of this platform across a large number of SMEs, you're going to be able to gain a lot of insight. But this data is going to be more and more valuable as more and more SMEs are onboarded, because if you have a really small sample size, the data can be kind of skewed one way or another. So you need a pretty big sample size in order to get, I would say, fairly accurate data and a really good overall picture. And then they just kind of go through a plan of how they're going to monetize that data through, different sources that would be willing to pay a significant amount for that data, whether it be individual investors, governments, financial institutions, different things like that. So really the goal, and this is different than kind of the China Business Hub, because the China Business Hub is really getting a service fee based revenue, while the international business hubs seem to be focused more on data gathering and analytics and then monetization of that data. So it's not too well known to say, I don't know, how much service fee revenue they're going to be getting from the international sites. But the CEO has made it pretty clear that they're focusing on the data monetization. All right, so this is what I really want to focus on for a little bit. Unfortunately, we don't really know if these are gross margins or net margins, but you can see the different verticals in China right now and kind of the margins that they are projecting for. Consumer goods margins up to 30%, raw material margins up to 5%, steel margins up to 8%, oil and gas margins up to 60%, clean energy margins up to 70%, automotive margins up to 5%, banking margins up to 1%, insurance margins up to 50%. So it's a very wide array. It'd be very interesting to see how they're calculating these margins, if they're counting the entire, amount lent or whatever on the banking margins to get that 1% yield. It'd be interesting to get more details on how they would be calculating these. So, unfortunately, it's kind of hard to grasp from the financials, because a lot of there's so many business segments of this business that it's pretty convoluted. So you can gather some information from the financials, but it can be fairly hard to understand exactly what subsidiaries are linked to each vertical and those kind of margins throughout time through the financials. Here they kind of go back into the revenue model outside of China, and kind of have highlighted here subscription plan-based BI and stock trading tools and apps. which is interesting. Subscription plan-based and customizable data feeds, production and distribution of market research and BI reports, native display, video, and other digital advertising formats, and AI and BI consulting services. So it's going to be very focused on how they monetize that data, and very big part of it is going to be based on AI and business intelligence reports. So it'll be a fun one to watch going forward, because it is a drastic shift in the revenue structure from the China model to the Canada or US models, international models. So the value of that data and them being able to sell it, we're going to have to really just wait and see how they perform on that. Here we get into financials and kind of guidance. So total revenue in millions, 209 in fiscal year 2022, 527 in fiscal year 2023, 2024 fiscal year, just over $1 billion. And these are all in Canadian dollars. EBITDA though, fiscal year 2022, 6.4, fiscal year 2023, 62.49, fiscal year 2024, 215. Recently they did revise this guidance. This is the new revised guidance. It used to be higher. So the biggest thing that changed, their revenue guidance did come down a bit, but their EBITDA guidance changed pretty drastically compared to their previous guidance. So they changed EBITDA guidance downward, and it'll be interesting to see once we get into the financials, see their previous margins and how they can expand those margins going forward. So we kind of got a feel for what they are expecting with their growth, with their margins, although those were not laid out to be gross or net. But going forward, we can kind of hopefully take that information and make some educated guesses on what might be possible in the future. And then they give us some investment highlights. So sales pitch, leading AI and analytics company with unique business model, planned expansion of business hub network to Europe, South America, Africa, Middle East, and Australia within the next 3 years. Free membership-based model with proven track record for developing rapid membership growth, a vast majority of revenue generated from recurring transactions, China, and recurring subscriptions globally. Large addressable market for products and services aimed at both business and consumers. So one thing I'm just going to say here, leading AI and analytics company, I mean, I would hold off and wait till you get a little bit bigger to say that. Because at this point, that's the goal that they're striving for. It's the revenue's fairly small to say you're a leading AI and analytics company. So I don't know. It's just kind of funny, but they definitely have the potential to, right? They have a vision. At this point in time, it's really about laying the roadmap, the vision, and then raising funds to be able to execute that vision and getting profitability quickly so you can invest in the expansion of the company to really just go after that vision. So I think that might be a little bit of a stretch, or I don't know. I just thought that was funny. So, but they definitely have a good business model that has good potential, but it's really about their ability to reach that potential, to expand efficiently, to have a good cost of capital on their raises, and to be able to get the funding to do this expansion, because we're talking about a lot of expansion in 3 years, right? So the execution in China has been great, and so they've kind of proven that to us, and it'll be exciting to watch them go forward and do the expansion in Canada, US, and all of these other locations. So let's get on over to the financials. Just kidding. Before we get into the financials, I do want to go over the latest Form 7 that was released July 31st, just kind of a business update that they put out. So let's go over this real quick. So first things first, number of outstanding listed securities we can see is 99.2 million. They do give us an update saying that from the COVID lockdowns, they have experienced a little bit a noticeable increase. So it looks like business is starting to ramp up compared to the previous months when China kind of went back into lockdown for COVID. Let's see what else we got. And then the most significant news, I'm just going to read this out. While its Chinese operations were getting back on track, the preparations leading up to the launch of the Canadian segment of the Issuer's Business Hub kicked into high gear during the period. Pre-registrations of both SMEs and lending financial institutions ahead of the launch continued to go well. And after a slow start to the process earlier in 2022, the issuer's employee recruitment process continued to a record number of new employees joining the organization during the period, bringing the issuer's total number of employees in Canada, split between the Montreal and Toronto offices, to almost 60, with the objective of having approximately 100 employees by the time of the launch well within reach. An announcement on the date of the official launch of the Canadian segment of the Issuer's Hub and on some of the business developments initiatives related to the launch of the hub is expected within days of filing this report. So that's good. That's really big news. It's something that a lot of investors have been looking for. The basically progress to be made on the Canadian side. As you'll see in kind of my personal valuation model, I kind of have the multiples for the company growing and getting higher and higher as they generate more and more revenue outside of China. So personally, I give the China revenue and the China net income kind of a lower multiple, while if they start generating that income in North America and the US in a significant amount, I believe that would lead to multiple expansion and increased premium on the company. Here they go on to say that, just showing that the Chinese segment of the business hub, kind of that management team has been working in tandem with the Canadian management team to make sure that everything is kind of in line to have the two business hubs integrated once the Canadian side is ready to turn up, and also working on additional networking opportunities and things like that. We also got a interesting note here that the issuer's executive management believes that the launch of the Canadian segment of the business hub will be a major turning point for this year in several respects. That belief is also shared by the president of the Asia Pacific Association of Small and Medium Enterprises, who met with the issuer's CEO during the period to discuss strategic alliance between the APA SME and the issuer. So really cool potential there. And I would not be surprised if we see some news releases in the future if they come to a agreement or a partnership with the APA SME. And then lastly, they just say that, hey, we've been working on our second quarter 2022 financials, on finalizing them for filing, and then also working on the upcoming prospectus financing. So they will be raising funds. They have to raise funds to meet their expansion. One of the biggest risks that I saw as a shareholder was the possibility of dilution at unfavorable prices. And I kind of baked that into several of my scenarios. So that's something definitely to take into account, is that, if they are dependent on financing and raises through issuing shares, then if they're issuing shares at a lower price, it's going to be more dilution for current shareholders. So hopefully they're able to come to good terms for this financing, and hopefully they're able to finance just enough to get them over the next phase of their growth. Because ideally, I would like them to be financing at higher rates, right? It's cost of capital of the company, and it's going to take ownership away from shareholders. So the less shares that they issue, the better it is for current shareholders. All right, let's get into the financials. So I'm using Ticker Terminal here just to pull up some key metrics, looking in USD. So what I kind of just want to show real quick is quarterly growth of revenue. And we can see that they've had solid revenue growth for what is just the China segment of the business. This one-time huge miss was from an adjustment for goodwill impairment and other impairments due to the Cubular acquisition and things kind of getting delayed from the different things that happened with the uplisting and lack of financing. Expansion got delayed, which basically meant they missed the original numbers they were going off of for the value that the Cubular acquisition would provide to them. So they took a very large impairment here. So it's paper loss, but it looks really, really bad. The other thing that I mostly want to focus on, and what I'm focusing on the most, is kind of these margins between their revenue and their gross profit, operating income, and EBIT and net income. And we'll go over that here in a second. Here we have their gross margins, their operating margins, their net income margins, and their free cash flow margins. And yeah, as you can see, they've kind of dwindled down, and lately, just recently we were sitting at about 6.2% gross margins, negative 5%, 5.75% operating margins, negative 9% net income margins, and about 4.1 or 4.41% free cash flow margins. But mostly I'm just focused on these gross margins because that's the first thing that's going to start to rise as they improve their margins on the products and the services that they're offering. So this is not something that typically looks too good when you're talking about a tech company. They have a lot of overhead right now. The revenue structure of the model in China has a ton of overhead, a ton of capital requirements, and fairly low gross margins, as we can see. Even in the best cases back in 2019, 2020, they're seeing about 17, 25, 14, 7% margins. So we've seen this kind of moderate down, these gross margins moderate down towards that 7% level. And really, it's just simple. We have to see the margins go up. Have to. We're not going to get, they could have $1 billion in revenue. If they have 6% gross margins, not a lot is going to come down to the bottom line, right? So for me, I'm focusing heavily on these margins. As they improve or as they add these additional services, we should see the margin expansion that we saw from the previous slide PowerPoint presentation. We should see these margins start to come through. The hard part is that we want to see the verticals with higher margins. We want to see those be the main revenue generators, right? Because that's going to have the highest profitability. So what I am focusing on personally is margins. Margin. That's it. And revenue. I'd almost rather see slower revenue growth and faster margin expansion than really fast revenue growth and bad margins. And we're talking about gross margins here, right? We're just talking about cost of goods sold. Okay. So, net margins, free cash flow margins, those can remain pretty low. I'm fine with that because they're going to have capital reinvestment into the business. So if they're taking that capital and reinvesting it into the business, I'm fine if they have, their bottom line margins stay pretty tight for a while, but they have to get their gross margins up, their operating margins up. So let's go over to the valuation sheet. All right, disclaimer, huge disclaimer. My valuation model is based off of future cash flows. It is not discounted back to current rates or to current time. I simply look at what I believe the companies will cash flow on the bottom line, or what their margins, their bottom line incomes are going to be. And then I do a calculation based off of a yield spread and the risk-free rate to see what I believe the equity would be worth at that point in time. So these prices are future point in time prices if the scenarios play out, if the bottom line numbers get to where I think they might get in that scenario, or where that scenario predicts. It's also why the beginning numbers can have zero or negative value, okay? Because if there is no net income, or if there is negative net income or EBIT or free cash flow, it would have a negative value because I'm valuing the bottom line, okay? I'm projecting out for 5 years though, okay? So through 2026, and that's really the number I'm focused on. So this model is really does a lot better for well-established companies that have solid bottom line historic numbers that I can go off of and see how the market has been valuing that company from a historic basis based off of the bottom line numbers and the risk-free rate. But I think this model also has some very valid points for valuing speculative companies, because in the end, it all comes down to bottom line. That's what it comes down to. It comes down to net income, EBIT, and free cash flow. So as an investor, that's what I look at. I look at what my capital is going to return to me from a bottom line perspective. Okay, so let's dive on into this, and we're going to get into the very bearish scenario first. So let's go through some assumptions, and we will look at the very bearish scenario. So you can see that I have very high dilution on the very bearish scenario. I have this broken down by year. We have dilution on a basis of 35% yearly down to 20% yearly as the company develops. We have a risk-free rate of 4.5%, peaking at 5.5%, going back to 4.5%. This is really dependent on the Fed and macro environment. But for my bearish scenario, that's what I'm going off of. Yield spread, and you'll see this trend in the yield spread across all the different scenarios. As yield spread, I have 8% down to 5%. The idea with the yield spread is that as the company matures, more revenues and more profit comes from the US, the yield spread will drop, which essentially results in a higher share price, a higher multiple, okay? Revenue growth of 50%, 60, 60, 45, 35 for bearish. Gross margins, we have 9%, 11%, 13%, 15%, 18%. Hopefully they are able to expand those gross margins. Operating margins, we have 4%, 6, 9, 11, 13, EBIT, net income, and free cash flow. I'm keeping these consistent just because it's hard to predict the margins across all of these three. So I'm keeping this consistent across all the values. 0, 0. So profitability really in 2024, 5% bottom line margin, 8% bottom line margin, 10% bottom line margin. On the bearish scenario, what that looks like is it essentially gets estimated revenue. 2022 is 186. These are all US numbers as well. So I apologize for that. I do things in US and everything's in Canadian on the financials, or not on the financials, but on the presentation for the revenue guidance. So a very bearish scenario, we have that growing, significantly below their 2024 estimated revenue. 2026 estimated revenue would be 933 million USD. Gross would be 126. Operating income would be 121. Okay. Based off of the EBIT margins, we can see our EBIT, or based off of the bottom line margins, we can see the EBIT at 93 million or bottom line basically at 93 million after 2026. And then here we have the dilution up to about 303 million shares, right? So that's like a very bearish scenario, okay? It's what it is. Like, it's one of those that, like, hey, if things don't go their way, if cost of capital is high, if they have to dilute at a high amount and then they're not able to hit their projections, that's a scenario that could play out. And in that scenario, we have 2026 share price of 324. And obviously, that share price is 324. Market cap would be, probably significantly higher than what it is now, because we have dilution of almost 2x up to 300 million shares, right? So when I talk about shareholder destruction, and essentially companies raising and depending on raises and not being able to time those raises when the share price is at a I guess good price for a raise to happen, the cost of capital, that's a situation you get into where you see just this massive dilution. And even though you're growing the business and the numbers, you have this huge headwind from diluting over those 5 years. So, all right, so let's get into bearish scenario. We're going to go a little bit quicker. So bearish scenario, now that you know what all these kind of do, we've got dilute, 30%, 25, 20, 20, 15, risk-free rate 4, 4.55, 4.54, yield spread 76654, rev growth 50, 70, 60, 50, 40, gross margins 10, 12, or 10 to 21. We got operating margin 5 to 15. And so basically, you're just going to see all these metrics improve a little bit through my different scenarios. So you're just going to see these metrics improve a little bit through these different scenarios. We can see here that revenue through 2026 would be 1.063 billion. Bottom line would be 127 million. Shares outstanding would be 258 million, which would give us a price of 618. So once again, right, we basically had massive amounts of dilution. Margins were not expanded to the point where we would probably hope. I really want to see them as a mature company. They should be able to get to 20% bottom line pretty realistically. With their business model, if it plays out. That's a big if, right? We're talking about all of these things that have to happen in order for this investment thesis to play out. And there's a lot of unknown variables that just keep on introducing more and more risk into the security, right? So I don't want to sound like I'm coming off bearish or anything. I'm not trying to do that at all. I hope and wish for the best for Tenet. I'm an investor. I want to see them succeed, but I want to be realistic in the scenarios that I build for my companies that I'm investing in. Base case, all right? So usually the base case is where I'm like, this is probably what's going to happen in my estimations. And it might be below management's guidance. It just depends on the company. So base case, dilute buyback, we have a 25% starting out, trickling down to 15% on a yearly basis. Risk-free rate, we have 3.75%, peaking at 4.25, trickling down to 2.75. We have a yield spread of 6, going down to a yield spread of 3. Revenue growth, 69%, 100, 70, 60, 50. Gross margins going from 11 to 25%. Operating margins going from 6 to 18%. And bottom line margins going from 0 to 15%, with profitability coming in 2023 at 3% bottom line margins. So in this case, revenue by 2024 would be about 713 million US. If we do a conversion on that real quick, you guys can't see this. I am typing on a calculator right now. 713 times 1 point, what, about 21 or so. That'd be about 862. So that's still below management guidance right now, but you know what? I think that's achievable for them. I think it's achievable. That's my expectations. Okay, if they beat it, great, awesome. So all this results in bottom line income going from about zero average to 256 million. Okay. With a share price fair value in 2026 in the base case of $19.54. At this dilution rate, we would go from about 96 million outstanding shares to 228. Now, I should probably update this number because we know that's about like 99 million. So that would affect this a little bit, but I think I've kind of already baked in some dilution here, so we'll go there. If we go to the bullish scenario, we got dilute buyback improving, going from 20% in 2022, staggering down to 10% on a yearly basis in 2026. Risk-free rate 3.5, 3.75, 3.5, 3, and 2.5 in 2026. Revenue growth kind of going from 69% in 2022, 125% in 2023, 80% in 2024, 55% in 2025, 50% in 2026. Gross margins 13% to 30% in 2026. Operating margins 7% to 21% in 2026. Bottom line margins of 0 to 20% in 2026. I think this is achievable. You know, I think it is not out of the realm of possibility for them. And the yield spread in this scenario could possibly even be better than this, especially if we get a lot of revenue growth from outside of China, if we have a lot of income from North America and Canada, if analysts assign, if the market gives a higher multiple to this company because it's growing extremely quickly, and if it establishes a better moat, a better, I guess, brand, more well-known, that could easily change, and we could look at higher multiples through this scenario. But even under these multiples, we've got a 2026 price or bottom line income of about 395 million US, price of about $47.62. Dilution being way lower. I think this would actually be a really good scenario. I feel like they'll dilute more than this though, but shares going from 96 million to 184 million over 5 years, which that would be really awesome in my book. So a very bullish scenario. Dilute buyback even less, starting at 20%, going down to 5% in 2026. And I think we just gotta, at least I have to understand that, you know, all of these variables, as the company becomes more and more profitable, there's less and less reason to dilute, right? There's more of a reason to buy back, especially if the security is undervalued. If you have a large net income, you know, as any company progresses, if you have a large net income, you have more power over the cost of capital that you're paying for any type of expansion, and you're able to self-fund expansion, right? So you're able to take advantage of, you know, if your stock is really richly valued, you can dilute and lock in funds for the next so many years of expansion. Or, you know, if you want to, you can do buybacks and take out low interest loans for some of the expansion. So, I mean, typically when a company matures, you want to see them just being very responsible in the allocation of capital that they have from their bottom line net income. So, and this is why all of these factors kind of cascade into one another, to where in the very bullish scenarios and the more bullish scenarios where we have more and more net income, all of these dilute buyback ratios get better and better and better. And along with that, the market is going to give a higher multiple to that corporation because it's going to be de-risked. So Anyway, little tangent. Rev growth 69, 151, 97, 60, 50. Gross margins going from 14 to 35%. Operating margins going from 9% to 30%. EBIT margins, or actually just bottom line margins, going from 0 to 24%. This would be revenue growth of 124 to 2.4 billion. So in 2026, bottom line would go from, about where we are now up to about 597 million in 2026. Based off the yield spread and the estimated risk-free rate. The yield spread is essentially, remember, the multiple that the company is being given on a market cap yield basis. So based on those, we have a share price of $118.33. Shares outstanding would go from 96 to 168. So that is kind of the summary of my my model on this. As you can see, the range of outcomes is extremely vast, right? And with a lot of small caps, especially in this phase when they're trying to turn that corner into profitability, you can project that it's going to be soon, but it's still ultimately unknown, right? It's not like we have profitability over the last 5 years that we can really base off of. We have to do more research and really try to gain a better understanding of the probability of these different scenarios playing out. And everybody's going to have different scenarios, right? You might not think my bearish scenario is bearish enough. You might think it's way too bullish. You might think my bullish scenario isn't bullish enough. I mean, everybody's going to be different, but this is what I got. So based off of my analysis, kind of the numbers that I'm looking at, the expectations that I have, base CAGR of 20%, base CAGR of 20%, margin of safety of 20%, because there's so much risk inherited by the unknowns that we can't really predict the probability of. We have to assign those unknowns risk, and there's a lot of them, right? So I give myself a pretty large margin of safety. I could really change these to really be like 30 and 10, come up with the same value, but either way, target rate 40% CAGR year over year. Right now we can see that a base case, the base case of $19.54, that would meet that 40% CAGR goal at the current share price of $1.90 US. If we wanted to get the 40% CAGR up through the bearish case, I think we were looking at a price of about 113 USD. And that, 113 USD. And that would give us about 40% CAGR, assuming the $6.18 price target is hit in 2026. So, for me, I've had to manage this position here and there, and it's changed a little bit here and there as my investing philosophy and I guess my investing not strategy, but my process has changed, right? So right now I'm pretty happy with the position that I hold. It's about 10% of my individual stock portfolio, and I was able to scoop up some shares in the 90 cent range, 96 cents or so, which was nice. I don't know. We'll see what happens. I'd be interested in this one with the position that I already have. I'd be interested in adding if it got back into that target area with my bearish scenario. So target area with my bearish scenario is about $1.13 USD. That gives me my 40% target CAGR through 2026, assuming a 2026 price target of $6.18. So yeah, that's kind of what I got. I know this might be a little, controversial, I don't know. I'm sure some people will disagree with the evaluation. That's fine. Um, I'm just here to kind of share my thoughts on not only Tenet but all bunch of different companies. And I'm just trying to document my process here. So I hope you enjoyed it. Leave me a comment if you have any questions. If you want me to go over any other companies, I'm trying to stick to a nice variety of companies. I'll do some small caps here and there, but I also want to do market caps and really stick to valuation. I don't want to be a one-trick pony, so I really want to make sure that as an investor, I'm well versed in multiple sectors, multiple mid cap, small cap, large cap. So I hope you enjoyed it. If you did, go ahead and like and subscribe. Leave me a comment if you have any companies you want to see a rundown on. And yeah, we'll catch you later. Peace.